Okay, and I got to share my screen again. So that's telling me there's 4 people in here, right? Cool. It's really sad how I am. Okay, so I need to go just back here. So it doesn't matter what. Whoa, whoa! Look at that. What the heck? How do I make that go away?
Click on the bubble again.
Why did you do that? That's so strange.
You click on the bubble, and so then it's like you're seeing your
everybody. Okay, that's not cool. I don't want to see that much of myself. All right, so we're on example. No, we've already done example 3. I'm sorry. Now I'm like flustered. We're on part 2, page 6, looking at business transactions. And what I was saying is, I filled in, the blanks here. That a business transaction is any type of economic event or condition that directly changes an entity's financial condition. And kind of on a simple level, think about economic event as, something being traded or exchanged of value. It could be money. It could be that we get some stuff, inventory, and we agree to pay for it later. So now we have a debt. And that's changing our financial condition. Like what I was trying to get at with the pumping of gas thing. You get gas. And, you're using a debit card maybe, but they're getting the money. So their financial condition has improved. They've got cash. Of course, they did give up inventory, but, they're charging you more. So they've their financial condition has changed in that one transaction. Does that make sense? All of that 11 and 12 minutes for that one explanation. All right, so I did say can be measured in terms that's supposed to be of money, not on money. I didn't catch that. All right, all business transactions can be stated in terms of changes in the accounting equation. And that's what we're going to look at today. We're going to look at some transactions and we're going to break down how those transactions affect the accounting equation. So this is kind of, again, just building into what we're going to be getting into deeper. All right, a liability created by purchasing anything on account is called an accounts payable. All right, so if I have a business and I buy some inventory to sell to customers and I don't pay for it right now, the company has agreed to let me pay for it in 30 days. To me, that's an accounts payable to my business. I got something and I owe. So you're going to also learn accounts receivable. So think about it this way. Payable means you have to pay someone or the business has to pay someone. Receivable means you will receive something as a business. Okay? It's probably on the next page. This way. Sometimes this thing imports in sequential order. Sometimes it imports in, like I have separate tabs for the pages. And I never know what causes it to do one way or the other. Because I've tried it in Word format, PDF format, changing it up. But that was on my Surface. So this has been working good. I'd rather it just be in where I can keep scrolling. All right. And, I'm going through these terms and these blanks because these are really important. I want to make sure you got the right answers. Items purchased that will be used in the future are called prepaid expenses. Okay, the term prepaid expenses is kind of a descriptive sort of category. You're not necessarily going to make a journal entry and put something in prepaid expenses. But, for instance, we talked about supplies. So you go to Sam's for the company and you buy paper towels and toilet paper, cleaning supplies, pens, copy paper, so on. And you buy enough to last a while because you don't want to go to Sam's every day. So you buy enough maybe for a couple months, stock up the supply closet and hold it there until you need it. Well, those are things that we're going to use and they will be expenses, but they're not right now. We've paid for them ahead of time, so they're prepaid expenses. So supplies would be a prepaid expense account. Y'all will find that insurance, prepaid insurance, so you'll have prepaid insurance, prepaid rent, anything that's paid for ahead of time that does not pertain to just this 1 month. And supplies, you can always assume when they're buying supplies that it's for more than just one period of time. Now, I'm going to go through all this with you, and we're going to kind of get used to the way the wording works, but you have to kind of pay attention to what's being said to you or what's being told in the problem to determine is it prepaid or not. Fees aren't, revenue, sorry. Revenue is a general, like descriptive category. You have revenue that describes, it's the general term for money earned by a business in the course of providing services or selling merchandise to customers. So think about revenue as money that the company makes doing what they do. Whatever they're in business to do, revenue is that's the money they earn. All right, so more specific names for revenue. We've got fees earned. Y'all will be using that quite a bit. Okay. Sales is a more specific name given to revenue earned from selling merchandise. So Walmart would have sales. Now, if you went and had your oil changed in their auto department, they would have service income on that, or they might call theirs. They probably call theirs service income or tire service, or you can call it anything you want. It's still revenue. Revenue means income. Now, you're going to be more specific in the naming of revenue for your company. Okay, does that make sense? A lot of this is just like preparation and just kind of barfing terms on y'all. You'll see where they apply in a minute, but I want you to understand what we're doing. And let me tell y'all while I'm thinking about it, on the very back few pages of your worksheets, I incorporated, let's see, bottom of 20 to the bottom of 23. I put in there like helpful hints and keywords to watch for. So keep in mind that this stuff is back here to help you clarify some things when you're moving through this chapter and actually the rest of the course. So that'll be helpful to you. All right, fees earned, merchandise sold to customers, other kinds of revenue. If you have rental property, you're going to have rent revenue. If you have a bank account that earns interest, you'll have interest revenue. Now, interest revenue is not what your business is going to run off of, but it might be a type of revenue that you have because you've got a savings account that's earning interest. All right, so an asset called an accounts receivable is a claim against a customer who receives goods or services and promises to pay you later. Okay, so you as a business, you sell some stuff to one of your good customers and you just gonna send them a bill and they'll pay you in 30 days or so. That's an accounts receivable. They have gotten what they're gonna get from you, and that means the transaction is complete as far as they've gotten something and you have a promise that they're going to pay you. And that is when revenue is earned. You earn it when you as a provider, either of services or merchandise or whatever, when you've done what you have to do to fulfill your end of the bargain, then revenue has been earned. So if the customer leaves with their stuff or you deliver it to them, or you spray their house for bugs if you're a pest man, whether or not they pay you right then, you have earned revenue. You've done your job. So that is the timing of revenue being earned, because you're going to hear that a lot too. Okay. Expenses. Expenses are created when assets are used in the process of earning revenue. Okay, so let me tell you kind of what that means. When it says assets are used in earning revenue, okay, that may mean I had to spend some cash to buy inventory that we're going to sell, which will make us revenue. It's kind of a long process, but Expenses, they go with the revenue that's being earned, and they're going to be recorded as they're used up. Trying to think of something else. You know, like when you pay your people their wages, it's insensitive. I didn't touch it, I don't think. When you pay people their paychecks, you know, it kind of sounds, I don't like the way it sounds that you're using your people as assets. But your people are assets to you because you can't run your business without them. I just, you know, it kind of sounds weird. But as your people are working for you, their wages that you're paying them, their expenses too. So it's kind of saying that assets are used. Yeah, I mean, but you don't want to necessarily call your people assets. You know what I'm saying? It just kind of sounds funny. It does to me. Maybe not. All right. Whoa. What have I done? All right. So some examples of expenses. I said supplies used. Okay. Well, just a minute ago, you said supplies are assets. Okay. Well, once they're used, they become an expense, which would be supplies expense. So you will have a supplies account that represents the asset. And once those supplies are used, you will have a supplies expense. You will know the difference. You will know when it's supposed to be supplies expense because we'll do that entry at the end of the period. Because what they do is this. Okay, so we fill the closet up with supplies, and at the end of every month, we go in there. Oh, did I do something? I'm touching it, I guess. Every month you go in there and you look and say, okay, well, we've used up a couple $100 of this. So you take a couple $100 out of the asset account and call it expense. But you'll know because it's something that they'd have to go in there and count it. You're not going to record supplies expense every time somebody gets a pen. It just doesn't make sense. It's too much trouble. Are y'all totally confused or y'all with me? Y'all bored? It's only 25 more minutes. All right, so supplies used, employee wages. I said that was an expense. So you'll see wages expense. You'll see salaries expense. And bear in mind, the name of all these accounts, like wages expense, supplies expense, these things can vary from company to company. It depends on what they're doing. What are their operations like? What is their business? Are they producing something? Are they an advertising agency? Are they an accounting firm? Different companies are going to have different type of expenses based on the nature of the work they do. So there are some that are pretty standard. Wages and salaries, that's pretty standard. Supplies expense, pretty standard. So we're going to kind of stay with the standard names of things. But there is some variation when you get out into the world and start seeing people's books. You're going to see some variations. Utilities expense. You might have accounting and legal expense. So there's lots of different expenses. These are just some of the basics and the ones we'll be looking at first. Okay, if you see where an owner is getting money, that is called a withdrawal. Withdrawals are not expenses. Withdrawals by the owner are distributions of equity. So essentially the owner is taking equity out. And since it's a sole proprietorship and it's his business or her business, that is their right to do that as long as there's money there. Okay, so let's look at an example. All right, you're going to have homework problems that look very much like this. So come on, you can do it. Come on. There we go. All right, so I wanted to at least do one example like this so when y'all get to it, you're like, what do they want from me? Okay, so Salvo Delivery Service is owned and operated by Joel Salvo. The following selected transactions were completed by Salvo Delivery Service during February. Indicate the effect of each transaction on the accounting equation elements. So these are your elements. Assets, liabilities, owner's equity. Also indicate the specific item within the accounting equation element that is affected and how that item is affected. Okay, one thing that I need to show you at this point is, where can I write that? Let's see, let's do that on a different, just did backwards of what I was trying to do. Let's do this. I'm going to put this on a different page. Okay, so what I want to show you is this. You've got the accounting equation, which is assets equals liabilities. I've got to start either printing or writing in cursive. I can't keep doing both. This looks like a first grader. Okay, there's your accounting equation. If you can't read it, you should have it in your notes. Okay, so assets. You have cash and accounts receivable, supplies, all those things. Liabilities, we have accounts payable, notes payable, that kind of thing. Owner's equity. Owner's equity is owners, you'll have the owner's name, capital. So it's like John Doe Capital. Okay, so any owner investments will increase owner's equity. Owner withdrawals decrease equity. Revenue increases equity. Expenses decrease equity. I hope y'all can read this. Okay, keep this in mind. We're talking about how these things affect owner's equity. Revenue and expenses, like all of these are their own accounts, and this will make more sense later on, but just what we're talking about right now is how these things affect, or changes in these things affect equity. Revenue, it's not an equity account, but ultimately it affects equity. Expenses, not an equity account, but any change in it affects equity. Does that make sense? It'll make sense when we get the whole bigger picture on there and you'll, oh, okay. I'm trying to present this in a way that last semester it seemed like it was, the way I've been doing it just seems confusing. It's the way the book shows it. I just think it's maybe we're going to try and see if this makes more sense. If it does not make sense to y'all, we will back up and go the other way and do it the book's way. But just remember, these not equity accounts, but they affect equity. Okay. Should I just erase one little thing? Okay, I got to get over my A-type personality. Let's go back to the other screen. Okay, so now maybe that'll help you out with this exercise. I was touching it too hard. Okay, so what we're supposed to do here is determine which accounting element is affected. And then in the next column, we're going to indicate the specific item, which means, is it cash? Is it accounts payable? Is it a withdrawal? Is it revenue? That's what this means here. So we've got two things to do, and then we have to indicate, is there an increase or a decrease in that element? So let's see, within the accounting equation element that is affected and how that item is affected. So the specific item. I got confused on whether, are we saying we're increasing or decreasing the accounting equation element or that specific item. But this is saying the specific item. Pay attention when you're doing your homework, which thing it's asking for. Because, like I said, if you've got owner's equity being involved, then you want to make sure you're putting increase or decrease to owner's equity. It can be off. So I think I took the wording from the homework problem. You should be good. So it's asking, how is this one affected? All right, so let's look at that. I'm going to put a line in the middle because you're going to have two accounts, or you're going to have two parts to every one of these. All right, so the first thing we've got is received cash from the owner as an additional investment. So what do y'all think? What do you see in here that you could specify?
Owner's equity.
Owner's equity, yeah. What about, since there's two parts to every transaction, what would the other part be?
It's an increase in the assets.
It is. Which one? It's cash. Well, you're right, and you're not wrong. We just got to get more specific. So received cash, and if you'll look, just so you know how to use these helpful. I can get back to it in those last few pages.
You just write
Oh boy, huh? Oh yeah, we're gonna write them in, but I'm just telling you, if you look back at your keyword thing, when you look at, like, this one says received cash. Okay, I've got paid on here. Do I have received cash? I do not. But just be sure you're recognizing, okay, what happened here? We received cash. So you know cash is coming in, and you said that's an asset, right? And you said owner's equity as well. And the reason we've got owner's equity affected is because the owner is making an investment. That make sense? Are you lost already? Okay, we're going to go through all of these and see how you feel after that. Okay, so which specific items were affected? We said cash, and what we're going to call this is, okay, who's our owner? His name is Joel Salvo. So his owner's equity account is called Joel Salvo Capital. That's an owner's equity account. That's the specific name of his owner's equities account. Does that make sense? Owner's equity is like a category. Assets is like a category. You have a category, like, I've used this example before. Okay, so we have guys and girls in here. And you three are males, we three are females. But you are Megan. So female would be like assets. Megan would be like cash. Does that make sense? Yay, nay? Males is a category. It's a descriptive category. What are you? You're a male. Which male are you? You're Payton. Does that make sense? Okay, so we've got an asset. That asset is cash. We've got owner's equity. It's called Joel Salvo Capital. It is an equity account, but that's the specific name of it. Okay, so is our cash increasing or decreasing? It's increasing. What about owner's equity? Is it getting bigger or smaller?
Bigger.
It's getting bigger. I mean, you put money in. Okay, like I said, I may not have said, I'm gonna say it now. Accounting's unlike anything you've probably ever done before. Don't get discouraged. Don't sit there after the day and watching this or trying this stuff and go, oh crap, I'm in trouble. It's gonna be a long semester. It's different. It takes some time to grasp onto the concepts. A lot of people get it right out of the gate. A lot of people have to wrap their mind around it like many, many, many times before it gets clear. Just remember, I'm here, I can help you, and I will get you used to walking through the process of figuring out what am I supposed to be doing here? I don't even have a clue. Okay, so don't get discouraged and don't get panicked. We are going to get through it together, because I see the looks on y'all's faces, and it's like that every semester, so don't worry. We're going to do this together, and if you get stuck, you just message me. And so what I'll start doing after y'all kind of get used to the names of things is I'll start asking you questions so that you can figure it out. Okay? All right, paid. What does paid tell you? If you pay something, what are you giving up? Money. So that tells you right off, gives you one of them, doesn't it? So what are we doing with there? Cash. So you could go ahead and fill cash in here. So what is cash?
An asset.
It's an asset. So if we had to pay something, is it getting bigger or smaller? Is it increasing or decreasing?
Decrease.
It's decreasing. Okay. If we paid creditors on account, then that means we owed some money to somebody. And we just went over the definition of accounts payable. A liability created by purchasing anything on account is accounts payable. So evidently, at some point, he purchased something on account and now he's paying for it. So you kind of have to go through your mind sometimes and go, okay, why do we have on account and what does on account mean? I know when I was learning it, I used to have to kind of go backwards and go, okay, what happened first? Because, you know, he's not going to pay anybody he doesn't owe. So at some point he did something to owe somebody. And that's in those keywords, on account, and, you know, look back there for help if you get stuck on something. I know on account is on there and paid is on there. So just, you know, if you start getting stuck, see if you can find something in these keywords that'll help you get through that and figure out what's going on. Okay, so on account, and it's something that he owes, so we're dealing with which account? It is a liability. That's the accounting equation element. And which liability was it?
Accounts payable.
Accounts payable. Okay, so did my accounts payable go down or did it get bigger?
It went down.
It went down. I don't owe as much anymore because I paid these people. So my liability decreased. Are y'all following? Yeah. I'm telling you, that's why I kind of beat it in y'all's heads. Do your homework. Do the reading. As tedious as it is, the repetition of doing this stuff is what will help you get used to it. Build customers for delivery services on account. So we're talking about customers. We're billing them. We're not collecting any money. And remember, I told you once the work that they do is done, they've earned revenue. So what do y'all think about this one?
Fees earned.
Fees earned would be part of it, yes. So let's see. Okay, what would fees earned? Think about this. It's a revenue account, but which accounting equation element does revenue affect?
Your assets.
Not the fees earned piece of it. Owner's equity. Revenue will increase owner's equity. So that's the accounting equation element. Did it increase it or decrease? Did our fees increase or decrease?
Increase.
Fees, you're generally going to see, if you've got fees earned, they're generally always going to be increasing. I can't really think of any time they might decrease unless you were given a refund, and they're not talking about a refund. So, all right, so if we build customers, that means they didn't pay us right now. We got to send them a bill. So if you'll look up, about halfway up on that page 7 from where you are, accounts receivable. So what is accounts receivable?
It's a liability.
Nope. Remember the difference. Accounts payable is a liability because the business owes somebody. It's a debt. Accounts receivable is an asset because you've got a right to collect cash. You don't have the cash yet, but you have a right to collect cash, and that's worth something. It will ultimately be cash. Does that make sense? Okay. So it's an asset, and it is increasing as well. All right. I'll probably get used to this stuff about the time they send us home again, huh? I shouldn't say that. I don't want to jinx it. So far, we're doing good. I haven't heard anything, so. Okay, on this next one. Received cash. Woo! And we made the board jiggle. This board does not like me. It's very sensitive. It must be a girl. Not that we're all sensitive, but I like to pick on females. We're very different. Okay, received cash from customers on account. So what's happening here? These customers charge something at some point.
They're paying
and now
on
they're
accounts receivable.
Right, they're paying on accounts receivable. So if we're getting money, so let's break it down. We received cash. So what have we got going on there? Cash is going in. What did you say? I'm sorry. Did you say income? Increase? What is cash? What kind of asset? Okay, and it's increasing or decreasing? Dang it. All right. So the other part of it, from customers, now that tells you if I've got something from a customer coming in or out, I've either got revenue or I've got them paying on their accounts receivable. Because when you sell them something or you do work for them, either they're going to pay you in cash or they're going to pay you a little bit later, which makes it an accounts receivable. So if they're paying us on their account, it's accounts receivable. All right, so I'll put that here. So what accounting element does accounts receivable fall under?
Also an asset.
It's an asset. What'd you say? No, because you don't owe anything. You're not going to be paying anybody. Somebody's going to be paying you. Now, if you were looking at that other person's books, it is a liability for them, but we're looking at our books. Okay? Does that make sense?
Yeah.
That's the thing about their books and your books. You know, you got to think about which perspective you're looking from. Okay, so this is an asset as well. And it's an increase. No, it's a decrease. Whoops, sorry.
I was going to say.
Yeah, and that's the thing too. We're not really doing it on this one so much. But you have to make sure that whatever you're thinking here, that whatever you're doing is causing the accounting equation to stay in balance. And we'll talk about that in a minute. Paid cash. So what does that tell you? What's that? I'm going to have to get y'all a bullhorn because it sounds like you're kind of talking around. I hate those things. I hate those masks. So tell me again. Don't be afraid to say something. If it's wrong, it's not a big deal. A decrease in money. That's right. So money is cash. She said it decreased. So what is cash as far as the accounting equation? It's an asset. Okay, so what did we say it's called when cash is paid to an owner?
It's a withdrawal.
It's a withdrawal. So we're going to call that Joel Salvo withdrawal or withdrawals. Okay, something that may give you some comfort on these homework problems. You're going to have drop downs or you're going to have a list to pick from. So you don't have to remember in these particular problems, what am I using? Even in the other problems, they're always going to have a list of labels for you, which, you know, you're going to have Joel Salvo withdrawals on there. You're not going to have to remember that it's got the owner's name on it. Not right now. Okay, so owner's withdrawals. Did the owner's withdrawals increase or decrease? The withdrawals themselves. That number, did it get bigger or smaller? It got bigger. And what about the accounting element that it affects?
Owner's equity.
Owner's equity. Is it getting better? Or are y'all thoroughly confused? You're not thoroughly confused? That's good. Thoroughly confused is bad. All right. We've got 3 minutes. Do y'all feel fairly comfortable with that? Because that's kind of what your homework's going to look like. We've got another larger one to do, but we can start that on Monday. We got 3 minutes. I mean, we can start on it, but we're not going to finish it. So, is that a dumb question?
No.
It is kind of a dumb question because I know y'all want to go. Let's just cut it off here, and we'll start on this example 2 on Monday. If you have any questions or you're getting stuck on your homework, just send me a message. It doesn't bother me over the weekend. It doesn't bother me in the evening. If I can't answer you, I'm not going to answer you. But generally, if I see your message, if I see your email, if you're desperate and you can't get me to answer, text me on that number that I said my cell number. You can text me. I had somebody text me the other night. It didn't bother me. I mean, maybe I just hadn't gotten enough years under me to get all crusty and crotchety, but it doesn't bother me. I went through school at night. You know, I worked all day and had to do school at nighttime, so I know what it's like. And if you need help, you need help. So y'all text me. If you can't get me to answer, you need an answer like you're just impatient. I have had like every personality, I think, over the past 2 years. Well, couldn't possibly be, but I've had people that are super impatient like that, and then, you know, people that just don't want to bother me. Don't worry about that. If I can't answer you, my phone's on Do Not Disturb after 10 o'clock at night, so you're not going to wake me up by texting me, okay? Y'all have a good weekend, and stay well. Inviting you people live streaming, I hope you're still there.
Let's find out.
Yeah, let's find out.
Well, you just stopped sharing.
Oh, did I?
You just click stop sharing. So now it's.
I didn't click it. I didn't. I was thinking about it, but no, it's still there.
No.
I was trying to minimize this.
Hey, it's recording still.
Bye. You guys have a good weekend.
Look at that. It works.
It worked.